What if I told you the market was never meant to make you rich? That every flashing chart, every expert opinion, every promise of quick wealth was just noise, a hypnotic illusion designed to transfer money from the impatient to the patient. Here's the uncomfortable truth. 90% of traders lose money, not because they are stupid, but because they are playing the wrong game entirely. They think trading is about finding the perfect pattern or cracking some hidden code. But the real game? It's about mastering yourself. Every day, millions sit in front of screens hoping to become overnight millionaires. But hope isn't a strategy, it's a donation to those who have one. The market is a mirror that reflects not your knowledge but your discipline, not your intelligence but your impulsiveness, and it punishes you not for being wrong but for being unprepared. Samir learned this the hard way when he lost $4,500 in his first 10 minutes of trading, not because the market was cruel, but because he approached it like everyone else, with ego, excitement, and zero preparation. But that loss wasn't the end. It was the beginning of discovering that trading isn't gambling. It's a craft, not adrenaline, but precision, not chaos, but ritual. Picture this. 9:30 a.m., market opens. Alex sees a stock surging 12% with no idea why. No risk calculation, no exit strategy, just pure FOMO, and clicks buy. 2 minutes later it drops like a stone. Panic sets in. He sells for a $750 loss, then watches it recover without him. This isn't trading, it's donation. And he'll repeat this expensive dance until his account hits zero, because here's what nobody tells you. Every trade without a plan is Russian roulette with your rent money. Samir's first trade cost him $4,500 in 10 minutes. Vanished faster than most people make it. Not because he picked the wrong stock, but because he had no system, no rules, no plan. Just confidence without competence. That brutal lesson taught him that the market doesn't care about your feelings, your hunches, or your hopes. It only respects preparation. Here's the dirty secret Wall Street doesn't want you to know. The market isn't rigged against you. Your brain is. The moment you risk real money, millions of years of evolution kick in, flooding your system with the same chemicals your ancestors felt when facing a saber-toothed tiger, except instead of running, you're supposed to sit calmly and follow rules while watching numbers that represent your life savings flash red. Studies show that losing money activates the same brain regions as physical pain. Literally, your brain can't tell the difference between losing $300 and getting punched in the face. Most people approach trading like tourists in Vegas, wide-eyed, hopeful, and destined to go home lighter. Professionals approach it like casino owners, calm, statistical, and playing the long game where the math inevitably wins. Samir tells a story that changed my perspective forever. One morning he saw his favorite setup forming. Textbook bull flag, volume increasing, all signals green. But he'd slept 3 hours, felt foggy, knew he wasn't sharp. The old him would have taken it anyway because it's a great setup, but the professional him passed because a great setup with poor execution is still a losing trade. He made $0 that day but saved thousands. While amateur traders roll out of bed at 9:25 and start clicking buttons by 9:31, professionals have been preparing for hours. Samir wakes at 5:30 a.m., not to trade, but to prepare his mind, and his routine is so specific it borders on religious. Review overall market conditions, scan for stocks in play, mark key levels on top 3 candidates, visualize both winning and losing scenarios, write his plan in detail, then step away from screens for 10 minutes to breathe. You don't need 10 strategies. You need one, executed 500 plus times. Samir traded profitably for years using primarily one setup, the opening range breakout. First 5 minutes after open creates a range. Wait for price to break above range with volume. Enter on pullback to breakout level. Stop loss below range low. Target 2:1 minimum. That's it. No magic. No secrets. Just the same setup executed with boring consistency. Want to know the difference between traders who last and traders who blow up? It's not how much they make when they are right. It's how little they lose when they are wrong. Professional traders are wrong 40 to 60% of the time, but still print money consistently. How? Because they've mastered the most important skill in trading, losing correctly. When Samir takes a loss, it's not an accident. It's a predetermined business expense. Here's Samir's formula that turned him from loser to consistent winner. Risk per trade equals 1% of account. Stop distance equals entry to stop loss price. Position size equals risk divided by stop distance. Example, $8,000 account equals $80 risk per trade. Buy at $40 with stop at $39 equals $1 stop distance. Position size equals $80 divided by $1 equals 80 shares. Using the wrong trading platform is like performing surgery with a butter knife. When Samir started, he used his bank's trading app. 5-second delays, market orders only, $8 commissions, and wondered why he kept losing. Then he switched to a direct access broker with hotkeys and millisecond execution, and suddenly the same setup started working. If you're not journaling your trades, you're gambling with amnesia. After 6 months of journaling, one trader realized 80% of his losses came from revenge trading after a red morning. Solution: hard rule. After 2 losses, laptop closed, gym time. His profitability doubled not from better setups but from eliminating self-destructive patterns. Before risking real money, Samir simulated 300+ trades. One student simulated perfectly for 3 months, went live with small size, and was profitable from week 1. Not because she was special, but because she'd already made every mistake safely. Success in trading looks nothing like Instagram suggests. It's spreadsheets and morning routines repeated until they become meditation. Samir made his fortune not through excitement, but through engineered boredom. 0.4% per day is 8% per month, 96% per year. Not through home runs, but through singles hit with boring consistency. When Samir takes a max loss day, down 2.5%, he doesn't revenge trade. He executes a recovery ritual. Screens off, gym session, written review, next day plan. Early in his career, a $1,500 loss turned into $7,000 because he couldn't accept the initial pain. Now, his recovery protocol has saved him hundreds of thousands. Here's the deepest truth. You don't get the results of a professional trader until you become one. Watch the language shift. Amateurs say, "I hope this works." Professionals say, "I execute my edge." One trader shared, "I stopped saying I want to be a trader and started saying I am a trader who's improving." That subtle shift changed everything. Trading is the loneliest profession until you find your tribe. In Samir's community, members post pre-market plans publicly, share trade reviews with screenshots, and celebrate discipline over profits. Traders who join serious communities improve 3x faster than solo traders, not from copying trades but from absorbing standards. The decision isn't about money. It's about who you're willing to become. Starting tomorrow, wake up 90 minutes pre-market, master one setup through 100 simulated trades, journal every trade, and declare, "I am a trader." The market doesn't care about your excuses. It only respects your discipline. The bell rings in the morning. Who will show up? The old you or the trader you're becoming? If you want to join a profitable trading community, click the link in the description to join us. Enjoy your day.